Hey everyone, welcome. It is 1 p.m. We just got the closing bell for Wednesday, March 20th, and we had a big day. We had the FOMC announcement today. We were saying earlier that we're probably going to have a muted and very quiet day up until the announcement of the decision, and then when Powell started talking. And that's exactly what we got. We got a lot of volatility after the announcement, and then we got very directional after Powell started speaking. That part is a little bit of a surprise for me. I wasn't expecting us to get super directional. I didn't think Powell had anything new to say, but he did actually say a couple of things that got markets worked up and sent us moving directionally to the upside. So the first thing he said was that we're not cutting rates until we see signs of inflation and it's a moving target, or signs of inflation is moving to the target, and that they're seeing more upside risk than downside in their inflation forecast. So that means that they're not expecting to cut rates as quickly as they had originally anticipated. That should have been bad news for the markets, but he went on to say that they're lowering their growth outlook and lowering their expected number of cuts in 2025 and 2026. But the good news part of that is that they're keeping the same number of cuts, or they're still expecting to cut 3 times in 2024. So that's a little bit of the good news. And then he also said something really strange and really political, and that was that if the Fed lowers rates a little bit faster, then that would help the country's deficit shrink. So we'll take that with a grain of salt. The country's deficit is not going to be shrinking because of a change in interest rates. The only way that's going to shrink is if we start bringing in more revenue than we're spending. So that means cutting spending, increasing taxes. That's the only way that we're truly going to get rid of this deficit. We're not going to print our way out of the deficit. We're not going to print money out of the deficit. So if we just keep on printing money and keep on spending even more, that's just not going to happen. So that was a very, very political thing for him to say, but it leaves room for him to have an excuse to surprise cut rates. He said, we're going to do 3 in 2024. If Biden or someone else starts putting a lot of pressure on him and saying, you got to cut rates sooner, you got to cut rates sooner, you got to cut rates more aggressively in a bid to somehow influence the election and say, hey, Biden's doing a great job. It's usually the incumbent. I keep saying Biden because it's the incumbent president. So they want to say, hey, we're doing a great job. Have a great economy. I don't want this stock market to slow down right before the elections. I want to look good. I want to be able to say I'm super good for the stock market. So Powell just opened the door for himself to change the speed of rate cuts if he starts to get a lot of political pressure. That was what was really interesting. And that is the more sophisticated, the guys who have been on Wall Street for a long time, they would have picked up on that. They would have noticed that. And that is probably why we got that move upwards in the markets. That was really unexpected. Well, I didn't expect anything like that to be in the speech, and so we did actually get directional today. So let's take a look at how directional we got and exactly how that looked. So let's go over here, and you can see that VIX did come down quite sharply, especially after 11:40, after he began speaking, and we just went straight down from there. And over here in the S&P 500, we are chopping sideways all day, very low volatility, tiny little bars. The second we got that announcement, our bars got really, really big. And then right here at 11:30, the initial reaction was to come down, but then after that, we went up the entire day, and we went up into the close. So there's a couple of things that we want to keep in mind. Now, I said that after the announcement, the initial move is usually the quote unquote wrong one, meaning that the next day we tend to undo the move that was done immediately after the announcement. If that is true, if that holds true this time, we should expect to move downwards tomorrow. If we look at it in a broader perspective from the day to day on a daily chart, then what we would see is that we did get directional today. We did break out of this box and we did make an all-time high, and we did close basically at that all-time high, closed at 520.45, and the high was 520.62. So not too far from that all-time high. And we did trade through the very highest purple line that I drew on this. Well, just barely traded through it. We just barely got above it. So what that means normally is when we make an all-time high, we pause to digest and we have a tendency to pull back a little bit. So over here, all-time high, pulled back a tiny bit. All-time high, pull back a tiny bit. Then all-time high, pull back a little bit more significantly. All-time high, pull back a little bit more significantly. All-time high, sideways. All-time high, pull back. So every time we make an all-time high, our tendency is to either trade sideways or to pull back a little bit. And that's not going to be any different this time around. It is very rare for us to make an all-time high and follow it with another all-time high. This sort of looks like it did it, but actually it didn't. We did close higher than the close on this day, but we did pull back a little bit first, and this day did not make a subsequent all-time high. It did the day after, and same with this one. This one did not make another all-time high 2 days in a row. It went sideways for a couple of days before making that all-time high. So our expectation is that we get at the very least a little bit of a pullback tomorrow. We're not going to match this all-time high tomorrow, or at least we're not going to expect to match the all-time high tomorrow. We're either going to chop sideways, or we'll have a little baby pullback to the EMA 8, or we'll have a little bit stronger pullback over a few days to the EMA 20 or to this trend line right here. And then we may resume upwards from there. Or we can look for signs of capitulation. And the capitulation would be like what we saw in SMH, a very large volume bar and a very large price bar. If we pull back a little bit and then we get super enthusiastic in this market, then we would have capitulation, and we expect that to be the end of this uptrend. Right now, we're not seeing the end of this uptrend. This is a continuation. This is a bounce off of the EMA 20, a retest it 2 days later, and then bam, new all-time high. So given that the normal pattern after FOMC is to undo the move that we saw the previous day, and that we hit an all-time high, and the tendency is to chop sideways or pull back after hitting an all-time high, we're really going to expect tomorrow to be a little bit of pullback. Now, what does that mean? That means if you have some nice profits in your positions, take them right tomorrow morning as soon as you can. And then when we start to challenge this EMA 8, that could be an opportunity to go long, because we are still in this uptrend. We'll have to examine the sectors a little bit more closely and we'll see if the same is true for the QQQ and the Dow Jones. But at least when we're talking about the SPY, we are still very comfortably in this uptrend, and we broke out of our box. So we're going to start pointing our portfolios positive again and take profits on whatever we could today, because that was a fairly significant move, even though at 0.92%, that's kind of a normal move. But given where we started and the way that we got there, that this is a significant move. This is more so than at least a few weeks, or at least a week. There you go. We had a 1.08 a little over a week ago. So this is significant that we broke out of that box, and it will just take it as an opportunity to position ourselves and continue for continued movement to the upside. When we look at QQQ, we're still in the box. This is a nice comfortable bounce off the EMA 20, or we did cross below the EMA 20, but we're comfortably in the middle of this box right here. So not nearly as bullish as the S&P 500. And earlier this morning, we were taking a look at SMH. We said, hey, this is a little bit of a challenge. This is a little bit of danger. We did get that huge bar, huge volume, huge price bar, and start pulling back to that EMA 20. So far it is held. So far it looks like this is a bounce and a confirmation bar, but we would want to have, in this case, normally a confirmation bar is good enough. But in this case, I want to just be a little bit more cautious and just wait at least for one more day of confirmation before we get too excited about the SMH semiconductors. If I look at XLK, looking a lot more like QQQ. If I look at XLC, definitely bullish. So we could have within the tech sector a little bit of rotation out of SMH, out of semiconductors and into the communications. This is really interesting. This is a clear breakout of this sideways trend that we've been in. But again, normally markets give us an opportunity. It's just not the normal pattern for it to just fly out. It will maybe for a couple days, but then the normal pattern is that it will pull back, mean reversion, and then we will bounce again from there if this is going to be a continuation of this uptrend. So uptrend, consolidation, and then it looks like a breakout to the upside, pull back to retest, then a true continuation of the uptrend. That would be the normal pattern. If that's the case, if XLC is really doing that well, then eventually we'll probably see the same thing happen in QQQ, and QQQ will begin to lead the S&P 500 again. But that's a little too early. We're too early to call that right now. So the big news out of Powell's mouth was he opened the door for this to get really political. And to get really political, that would mean White House pressure to keep the markets running upwards. And so if we do falter, if we start to break to the low side, if we start to see this break downwards, if we see DIA break downwards, it's interesting, we broke out of this range in the Dow Jones as well. And then in the S&P, if we challenge this downside and we come down, anytime that happens, you may see political pressure on Powell to cut rates, and there might be a surprise cut, and that would send markets up once more. This was not something that we were considering earlier. This is completely brand new that came out from the words that Powell said today. So I am no longer expecting a big move to the downside. We're moving up, consolidating. If we start to go down 5%, if we start to challenge this MA50, if we break below MA50, I would not be surprised at all if Powell goes, hey, surprise rate cut, and sends this market right back up, because we have a political year. So now the chances of a large correction before the election just went suddenly way down. And we might consolidate, may go for a little while. We could get a pullback, 2, 3, 5% pullback, but we're no longer going to expect a consolidation. There is now political involvement and Fed Reserve involvement in the markets. And so we cannot expect that the markets are going to work according to their natural rhythm. There's man-made influence on the markets right now. And eventually the natural rhythm will exert itself and overpower any man-made influence. But in the short term, the man-made influence can actually impact the way that these markets move. And so the probability now and the likelihood of a major correction before the election cycle has now greatly diminished. And that is bullish. That's bullish for this market. So we're going to turn our portfolios back bullish again. If I look at the Dow Jones, we looked at that very briefly. We did break out of this box today. So we're going to expect a pullback test and see if we can bounce and continue to move upwards. What you see is that movement, today's movement in particular. Let's do a little bit of a replay right here. Okay. You can see that as I move forward, these two moving averages were flattening and getting closer together. You see that? They got flattened and they got really close together. Today's move, is this today? No, that's not today's move. Today brought us out of the box. Today's move changed that. We got a very positive slope. You can see that this purple line is parabolically up, and this blue line is linearly up, which means that the gap is widening and both are pointing upwards. And you can see that this EMA 8 is above any previous level right here. This EMA 20 is above any EMA 20, previous EMA 20 right here. So the price has made a new high. The EMA 8 has made a new high. The EMA 20 has made a new high. There's separation between all three of those. So now it is looking very much like the Dow Jones is going to start breaking out of this consolidation and moving upwards. What a difference a Fed announcement makes, huh? There's just a very, very different picture than what we were looking at and painting as early as this morning. So we have to be flexible and understand that this situation is changing and recognize when there is a signal that the situation has changed. And the phrase that, or the clue that we got was that Jerome Powell got political and started to say things that make no sense academically, make no sense based on historical evidence, make no sense based on how markets and budgets and basic financials actually work, but sounds really good politically. And so we suddenly have to take politics into account into this market. Normally, that's not something I do, because if we start trying to use politics to predict markets, usually that ends very badly. But in this case, we do see a direct, not quite impact yet, but we've opened the door for artificial stimulus of the markets via monetary policy. And if done correctly, it can definitely change things. It can definitely alter the course of a market short term, temporarily. And the best way of doing that is via surprise, because if it's not a surprise, then it's priced into the market already. But Jerome Powell just opened the door to surprise rate cuts. And the top institutional guys, they will have caught on to it, whereas retail people probably have not caught on to it. So that's why our picture looks very different now. Okay, so given that Dow Jones went up, QQQ did go up but not break its box. SPY did move up and break its box and make it all-time high. Dow Jones made an all-time high. We're probably looking at the more defensive, or definitely looking at the less speculative region of the markets. And we will want to see that probably created fragmentation all over again. Let's take a look real fast. Okay, on a longer term, XHB, XLC, XLK, those make sense. XLF, XRT, XLF is way up here for some reason. XLI is up here. Then we've got XLB, that's fine. VY, Y is way down here. So we do have fragmentation within the QQQ. So that makes sense. It's chopping sideways. And then we've got healthcare down here, real estate, PU. The rest is quite, non-fragmented. It actually makes sense. So the major strangeness here is that we have F pretty high up here, like towards the top. And we've got, what was it? Y way down here. So we have fragmentation on the upper end of the speculative spectrum. We have fragmentation, but everything else is pretty much aligned. And then we've got, so we need technology, or specifically we need consumer discretionary to play catch up for all of this to work out and have smooth upward markets. Let's look at just today. Oops, that's not what I wanted to do. Just today's change. What is really interesting is that silver and gold got a really big bid. Bitcoin got a really big bid. So everyone's interpreting this as not great for the US dollar. Normally we would expect that it's okay or good for the US dollar, but, or at least better than a rate cut. But right now we're probably saying that, taking this as a signal that the Fed believes that inflation is going to be operating for longer, and that's why they're not cutting the rates. So that if that fear outweighs the fact that they're not going to cut rates, then that would hurt the US dollar, and there would be some flight to other perceived monies like Bitcoin and silver and gold. So let's take a quick look at a Bitcoin ETF. Okay, got a little bounce today, not a super huge one, but a little bounce off of this EMA 20. We'll look at gold. Gold got a lot of attention today, almost challenging I believe that's an all-time high right there. Yes, getting very close to an all-time high right there. And then silver also challenging recent highs. Silver's all-time high is way, way, way up here. So we're nowhere near silver's all-time high. That would be some people's arguments that there's a lot of room for silver to keep on going up. I would be a little bit more cautious because that relationship hasn't held for many, many years. It's been a long time since the gold and silver ratios have held. When they do finally realign themselves, or if they ever finally realign themselves, I would expect that they would, but it's not anytime soon. So that's far off, and we don't need to consider that. But these precious metals, Bitcoin did catch a bid today, so we would expect our dollar to have moved downwards. Yep, a pretty big bar on that dollar today to the downside. And let's take a look at TLT. TLT mostly sideways. That's interesting. So we did go both down and up. Let's see how that played out during the day. Okay, initially a huge spike upwards, and then traded way down, recovered, and then I would call this sideways movement, sideways in a large range. So went way down, recovered, went sideways, and if we revert, right, if the first move gets undone the next day, then we would actually expect this to revert to the upside and then pick a direction after that. So there's a baby opportunity here for the next 1 or 2 days to the upside in TLT, which would probably be associated with recent highs right here. Today's high, this day's high, they're pretty much the same height, or same level, I should say. So we could get a reversion to that high right there. And then we'll see how TLT behaves from there. We'll probably chop sideways because we're saying no rate cut, no change to interest rates, at least until the next cycle. I don't know if the CME Fed Watch tool would be updated this soon, but in May, yeah, it did change. It was like 5% this morning. So we did get a little bit higher probability of a rate cut that was reflected in the possibility of this moving upwards. But then there are probably a few savvy bond traders who are like, oh, he just opened the door for a surprise rate cut. So we changed our probabilities right here. June went up as well. You can see that a day ago, it was 55.6%. Now it's at 68.3. And the 50 basis point went up as well. So we're back in the 70s for a rate cut in June. I still think that's overly optimistic. If Powell is going to do a surprise rate cut, it's unlikely to be in June. It's more likely to be closer towards elections and when the market is actually showing signs of trouble and struggling. Right now, the market's super strong. So June, we're probably not going to need it by June in terms of propping up the markets for political visuals or political platforms. So I would still say the probability of a rate cut in June is still pretty low, 20, 30%. And we need to probably revert down. But July, September, that's a completely different story. September would be less opportunity. I'm not sure exactly when elections happen. I think maybe November 7th might still be before that, but it's probably too close to elections. Even if it is before elections, probably too close to elections. So we may get, if we do get a surprise cut, it may be July, it may be September, or if Jerome Powell really wants to throw a monkey wrench into the cogs, he could do a unscheduled off calendar rate cut, which would be really crazy, and it'd be very obvious that it is a political move if he does that, because we are not in an environment, inflationary or otherwise, for that to be justifiable. So I'm not really seeing too much probability of that happening unless we start cooking numbers. The Bureau of Labor and Statistics or the other organizations that put out the various economic data, if they start cooking the books or start changing the ways. So unfortunately, the way this political game works is that every once in a while, we change the way that we calculate a number. And sometimes we go, oh, well, this is the CPI. Oh, we don't care about that. We care about the CPI X food and energy. That X food and energy thing, that happened, if I remember correctly, it happened just before or right around the time of the 2007-2008 financial crisis. They always had the X food and energy number, but the emphasis on that number was never quite the same. We always looked at the whole CPI and the X food and energy, and we took it as a package. And now, after that, since then, we started focusing X food and energy. That was a change in not necessarily the calculations, but a change in the visuals and what we emphasize. So that is a very political move. What does change is the basket of things in CPI. That has changed over the years. That has become very political. Oh, well, does a normal family need steak in this basket? Or is it just bread and eggs and milk? Oh, well, do we need to include eggs in this? Or eggs have they suffered a huge amount of inflation, abnormally outsized inflation compared to these other things? We're not going to include it this time, or maybe we'll stop including it going forward. Those are the types of games that can be played in the calculations and in the accounting. So if we start to manipulate the way that we report numbers, then suddenly Powell could be justified in saying, oh, surprise rate cut. But we'll see. We'll see how this all plays out. I don't normally like to look at the political aspects of this. I usually just completely ignore them and don't even care about them because they are temporary effects. This year being an election cycle, the temporary effect lasts a little bit longer than normal. So rather than a couple days or a couple weeks, it might last a few months or up to, I don't think it'll last an entire year, but there is potential to muck around and manipulate this market a little bit more than usual. We should still see it, though, in the volume and the price. That's why I normally don't pay too much attention to it. But if I'm going to kind of lay out on a somewhat longer term than I normally do, meaning like beyond a couple of days, beyond a week or two, beyond a month, then I do have to start taking those types of things into account, unfortunately. So for now, we're not going to worry about any of that. All we really need to know is that suddenly the downside risk in the market has diminished. We are probably have a floor. Jerome Powell just basically told us, I'm going to put a floor in this market. If it starts to go down and starts to get a little too wild, I now have the option to cut rates sooner than if the data suggests. So that's a game changer, and we'll pay attention to that very carefully. That changes our risk profile inside of the markets, and that means we should be leaning more to the upside. But for now, in the slightly more defensive sectors, and when we start to see the QQQ start to pick up steam, especially XLY, if we start to see this pick up steam, then we will be even more bullish in our portfolios. And then let's take a quick look at our sectors, our sector momentum. Oh wow. I don't think I've ever seen a complete page of green. Every single metric. I don't think I've ever seen this. If I have, I don't remember. And I probably remember something like this. This is incredible. His financials are so overdone. Okay. Well, when you get a picture like this, it's really hard to read. It's really hard to make any sort of conclusion. It's like saying that if everything's always good, you don't know what's bad, and you don't know what's better than the other thing. So if I say everyone in the class scored 100% on the test, I don't know which student is better than the other students. They all scored 100%. If it's the entire semester, every single student scored 100% on every single homework assignment, every single test, every single graded event, every single person in the class is 100% A+ student. I don't know which one's better than the other. What it means is that I'm measuring my students wrong. I need some sort of separation to be able to distinguish which students are doing better than the others. So when a teacher goes and looks at those students and says, I don't know how to help any of these guys because they all scored the exact same and they all scored 100%. I would have to start to see somewhere, someone has to show me where they're struggling so that I can help them in that specific area. So it's not a bad thing from a market perspective, from a trader's perspective. Weak numbers are not a bad thing. They show us where to put our attention, put our focus, and who needs a little bit of help, who's doing really well, who's doing so well they probably can't sustain it. Oh, this guy's he's been getting 100% A+ all the time, but throughout his history, he's been an 80% student. Suddenly he's gotten 100%, 100%, 100%, 100%. How is he doing it without cheating? Oh, maybe he's staying up super late at night, and that's not sustainable. Eventually he's going to get tired, his body's going to crash, it's going to force him to sleep, and then he's going to get really low scores, and I'll even back out to 80% again. That's how we look at things, and that's how we evaluate things. So when I get a full screen of green like this, I don't even know what to do with it. Just like, someone is going to start failing. They're going to start falling asleep again because they've all been burning the midnight oil, and some of them are not truly A+ students. So they're going to fall asleep and they're going to start doing worse again, and then I'll have separation again, and then I'll know what to do. But right now, when everyone is performing at this bright green level, we have no clue. So this is not helpful at all. So all I can say is that some of these people, some of these sectors, some of these students, they are going to start going red faster than the other ones. And then we'll have separation, and then we'll know what to do. So right now there's over exuberance, basically. That's what we're seeing. That's what that picture tells me. Over exuberance, everything got hyped way up during not only today, but during this entire period. Everything got hyped way up. And at some point, something's going to crack and revert back to normal. And we'll be able to see that separation. So for now, we just have to wait. We just have to wait for that to actually happen. So very interesting day. Very large change to the way that we're looking at the markets. It'll be interesting to see what we see tomorrow and the rest of the week. And when we finally get a clearer picture and be able to see what sectors are actually stronger and which ones are actually weaker, and actually decide what to do with our money. So when we look at that, so any competent fund manager is going to do the exact same thing I just did and go, where do I put my money? I don't know. At least everything that I do right now is a gamble. So I most likely will sit on the sidelines with the vast majority of my money. I might take a stab here and there with small allocations, but I'm not going to risk my entire portfolio on something like this where nothing is clear and everything is a gamble. So we'll do the same thing. We'll plan on pointing our portfolios to the upside, but we're going to wait for our opportunities because they're not right now. Maybe on the very, very short term with a few very specific systems, we have those opportunities. But again, we're not going to bet the farm on them. We're not going to give those huge allocation because we're going to get no market help and no participation. And we don't know when that market particular sector might turn around and crash on us. It might be exactly what we just put our money into. So we don't want to do large allocations until we get separation and we can tell which ones are weak and which ones are strong. Okay, hopefully that was interesting. You find this change in the markets interesting and exciting, and we'll see how we navigate it once we get a little bit more clarity inside these markets. Have a wonderful rest of your day, and I will see you guys tomorrow morning.